What's up, Struggling Nation? This is Unreal bringing you last week's recaps. What's up, Struggling Nation? This is Unreal bringing you some information for new traders. When to trade and when not to trade is the topic. As a new trader, we all are going to struggle with this: when to get in the market, when to get out of the market, when not to get in the market at all. It's times in the market where the market is trading sideways, also called range trading. Kind of the market is in a channel going from left to right, bouncing down, then bouncing back up, then bouncing down and bouncing back up, and not really making big moves. As a new trader, where I've lost money and where I made mistakes was trying to trade using my strategy when the market was moving sideways. As new traders out there, you want to stay away from that. So when you see this and you see this developing, don't even bother to get in. Just watch the market, watch price action, read it, see what it's doing. So what I was doing and where I made my mistakes at was I saw the market going sideways. Then I was trying to time it on whether it was going based on my strategy. I was timing when the market was going to break out of that channel. I would bet that let's say it was going to break to the upside. It would test the upside, then come right back down to the channel and drop down, lose money. Vice versa, I would bet that based on my strategy that the market was going to price action was going to drop. It would test the bottom, come back into the channel, then shoot up. Got trapped, got stopped out again. So these are scenarios and cases where I lost money trying to trade when the market's going sideways. So as a new trader, based on your experience, based on my experience, I recommend don't even trade that. Just sit back, watch it, study it. That's the day that you don't trade. That's just the day that you're a student. You're just studying the market. Don't trade on days like this. You will lose money. As a new trader, guarantee you will lose money because you're going to try to bet on it, but neither the bulls nor the bears have control. So you don't want to put your money in a situation where no one has control. One of the benefits of reading price action tells you who has control at that moment. Based on your strategy, it gives you a point where to get in at that you plotted. But if you're not able to read price action because neither the bulls nor the bears have control, then you're just setting yourself up for a loss. I didn't look at the market this way when I first started, but as a new trader, now I'm able to see this. Yesterday, for instance, the market traded sideways, did not make a trade. Saw it range trading, bouncing up and down, neither the bulls nor the bears had control. I didn't even bother to trade. Saw one case where I could have got in and made a scalper's profit, but didn't even risk it. I said, you know what? Market is moving sideways, no one has real control. Let me stay out of it. So one way to stay in the green and one way to stay positive and one way to keep you in the game and develop your skills, you have to trade based on what price action is showing you. If price action is not showing you anything, don't even bother to put your money in there. It's a waste of time. You're gonna lose money, and it's not worth losing. It's not worth the emotional roller coaster that you go through when you lose, based on you doubt yourself. You tell yourself, well, my strategy was right, where I plotted the end of it was right, everything was right, but the market wasn't right. Nobody had control. So when you trade, you want to always trade when you see who has control. Then you enter your factors with whatever your strategy is, your pullback, your break a trend, break a structure, pullback retest, oversold, overbought, moving averages, anything that you've already strategized that works for you. That's when you trade, when you see either the bulls have control or the bears have control, and you're able to get in and make your profit. If you don't see a setup like that, don't bother to get in. You're going to lose money. Another way of not entering the market, another reason for not entering the market, when you see candles with high big wicks. So for instance, if the market opens, you have a red candle, has a big wick on the top, big wick on the bottom. Then it goes to a green candle, has big wick on the top, big wick on the bottom. Then it goes to a red candle, has big wick on the top, big wick on the bottom, and vice versa. And you see this throughout the day. Don't trade when you see price action moving this way. All it is the bulls on one side and the bears on the other side, and they're pretty much just bumping heads like this. Who's gonna take over? Nobody's relinquishing control. They're just going at it like this over and over and over and over and over and over and over again. Even if you see, for instance, you see a green candle with a big wick on the bottom. Then the next candle, you see a red candle with a big wick on the top. It's the same exact thing. They're just battling. The bulls and the bears are colliding like this. They're just pretty much at war during that time. One of them wants to take control, and neither one of them wants to give up control. So they're battling back and forth. This is something that I've learned from now going on close to a little over 2 years, but close to total 3 years of trading, where I see where I made my mistakes at. From a new trader to new traders out there, you're gonna see this and you're gonna think, oh, based on what I've learned, based on classes I've taken, based on books I've read, I can see a candle with a big body and a long wick on the bottom. Of course, it's showing you buying pressure. But then the next candle you see, same thing, big body and a long wick on the top, that shows selling pressure. But if you see one back to back like that, where you see a buying pressure and then you see a selling pressure, what are you really seeing? You're not seeing anything. You're seeing two stubborn bulls, one bull and one bear going at it, nobody giving them control. Till the market gets out of this tight back and forth battle, don't even trade. Don't even trade. And if it goes on for a few hours, I would leave it alone. Based on my experience and based on what I'm doing now, when I see that, I just stay out of the market, because usually whoever ends up gaining control ends up losing control. And then you as a new trader, what you're gonna think is, okay, if the bulls gave up control, then price action is gonna drop. As soon as I see it break some kind of structure, some kind of resistance, some kind of support, some kind of trend line, some kind of moving average, when I see it break, then I'm gonna enter based on my strategy and try to capitalize on the way down. Well, the bears end up losing control, and then the bulls come in, what I've seen happen. Sometimes it does work in your favor, but based on my experience, I don't even trade it. I don't even take the risk. It's not worth me losing profit over it. Like I said, when you lose money in this trading thing, it comes with a lot of emotions. We as humans, we're emotional creatures, so we have no control over that. And the emotions either is gonna make you quit or it's gonna make you a better trader. And one way of controlling your emotions, you have to figure out what that is. What do I have to do to control my emotions to be a better trader? Which is what I'm learning and what I'm still learning. So I'm telling you from experience, this is one of the things that I use and I do now to control my emotions, so I don't have that issue where I'm losing. If the market is not direct with me, I don't trade. Before, I wanted to get in and trade every single day. Every day I had to make trades. Now is, if I don't trade today, it's fine. If I don't trade tomorrow, that's fine. If I don't trade the next day, that's fine. If I don't trade all week, that's fine as well, because price action wasn't clear to me. I need price action to be clear to me in order for me to make a trade. When I wait for that and I'm patient like this, I'm profitable. You've seen how I've showed you what I've made, and there's plenty of other traders out there who have way more experience than me that make way more than that. But they have practiced the things that you as new trader, me as a new trader, are trying to learn, which is emotions, controlling your stop loss, knowing when to enter and when not to enter the market. That's very key, very important. So this whole video is I wanted to share with you all that. I'm gonna show a couple pictures of, and I'm gonna point out where I saw what price action was doing, how it was moving sideways, or you had the bodies on the candles with big wicks. I'm gonna show you those examples on some pictures I took off my screen, give you an idea exactly what I'm talking about. But when you see this in the market, don't trade it. Especially as a new trader, don't trade. Experienced traders could get in and out and make a quick scalp. They're good. They got years behind them to be able to make decisions like that. You, myself, as new traders, we don't have that experience. And even when I develop that experience over time, I don't want to trade that market. If the market is moving sideways, I'm fine not trading it, because I know tomorrow, the next day, the day after, the week after, price action is going to show me what I need, and then I'll hit them over the head then. Remember, quality over quantity. One of my old teachers, he says this all the time, and I'm stealing this from his playbook, and now I see it as a new trader. Quantity over quality. I'm sorry, quality over quantity. So you can have 30 trades, it could be bad trades, but you can have one good trade and it just sets you up for the rest of the week or for the rest of the month. So you got to look at it that way. Don't trade the market when it's trading sideways. Don't trade the market when you see big wicks on the top and bottom, back-to-back red and green candles. That means that the bears and the bulls are just fighting it out. Nobody has control. What's made me money and what's kept me in the green so far in 2022 from having a whole year of red. 2021 was a whole year of red. It was up and down roller coaster, more down than up. But what has kept me in the green and what's keeping me in the green is trading price action based on price action being clear to me. If price action is not clear, I do not trade it. I don't go nowhere near it. Nowhere near. When price action is trading sideways, that's not clear to me. I don't trade it. When price action is showing me candles back to back with big wicks on the top, big wicks on the bottom, I don't trade it. It's not clear to me. I only trade when price action is clear. When it's clear, then I go into my strategy, my factors. Has to hit at least three factors for me to trade that strategy. That's the only way I would trade it. If I don't see my 3 points, then I don't trade it. So those are the 2 things that I use, about 3 things that I use to trade, to keep profits in my pockets and keep from losing. Hope this helps you as a new trader. This is Unreal, sharing my thoughts on the market, my ideas of what I'm going through as a new trader, what you're going to go through as a new trader. I hope you like it. Any comments, anything else you want to know further, please reach out, send me a message, like, subscribe, share the video. This is your boy Unreal with Unreal Trading, signing out.